guys, welcome back to my YouTube channel. This time we will discuss about why do some people claim the federal reserve is unconstitutional. So here we go, let's see the video. The U.S. Constitution does not mention the needs for a central bank, nor does it explicitly grant the government the power to create one. The issue adheres to a strict interpretation of the Constitution, believe the government does not have any authority, not specifically listed as one of the enumerated powers of Congress. Critics also argue the Federal Reserve Bank violates the Constitution by being too closely tied to the private sector, and it lacks transparency and accountability. Enumerated powers, Article 1, Section 8 of the U.S. Constitution lists most of what is commonly referred to as the enumerated powers of Congress. Amongst them are the powers to borrow money on behalf of the United States and the power to coin money, establish currency and determine its value. Critics of the Federal Reserve point out that the Constitution makes no reference to a centralized bank to carry out this action. The 10th amendments also state the federal government is only to have those powers expressly granted to it. Therefore, it is argued the creation of the Federal Reserve itself was a violation of the Constitution. Combating financial collapse, the Federal Reserve was formed as the reaction to the panics, the late years of what had been regular collapses of the economy. Prior to creation of the Fiat, private business owners were counted on to revive the economy during times of crisis. Critics argue the problems the Federal Reserve was created to fix are no longer relevant in the much larger and complex economy of 2020. Overseen by private board of governors, all 12 regional Federal Reserve banks are overseen by 7 governors who sit on the board of governors of the Federal Reserve. This independent board and its chair are appointed by the U.S. presidents and are confirmed by the Senate. The presidents of the regional banks, however, are appointed by a board of directors comprised of mostly private sector representatives. The directors argue these officials typically have close ties to the banks they oversee and are therefore more likely to look the other way when policing bad behaviors. Critics believe the system violates constitutional law because public policymakers are being picked by a quasi-private structure. Quasi officials are appointed, yet individuals from the government to remove them. The policies created by the Federal Reserve influence the nation's economy and financial dealings all over the world. Those who criticize the Fed to see more transparency and accountability within the organization. The public, it is argued, plays a role in electing officials in every branch of the government, yet has no say in who is appointed to the Fed or how it manages the economy. Jurisdiction, transparency, and accountability. The House Financial Service Committee approved legislation that requires the Fed to communicate its policy decision to the American people. Will the Fed oversees reform and modernization, or FORI, as it makes no attempts to change the appointments process? It implements many things, critics have long requests. The Fed is required to disclose the salaries of employees and forces them to abide by the same ethical requirements as other federal financial regulator. This legislation is meant to modernize the Federal Reserve and provide more information to the public.